Hello traders, James Stanley with StoneX and Forex.com. Something I've been waiting for finally happened, and it happened in a really big way and probably from a driver that very few would have expected when I started looking for this more than a month ago. The US dollar has broken out to a fresh high, and it did so with a bang. Now, while it's easy to look back with hindsight and see the reason why that breakout hit, the formation that was building in the currency was building for more than a month. And this happened after a failed run at lows, after we got a deep oversold backdrop. And I mean, when the bottom was set on the day that President Trump said that he thought USD weakness was great. Since then, stark change of pace. Now, at this point, there's still a pretty imposing level of resistance setting forward on USD. I wanted to take a look at this from a long-term perspective. The benefit being the more term that we get, the more a distance that we get, I think the clearer that structure can become. And in a matter like this, I think that's really important because we've seen a slingshot of a move, a really tough move to chase. There's a few different variables involved. And so I want to look at this from a few different perspectives. So let's get to the chart and start taking a look. So first and foremost, here is that move in the USD in all its glory. The build was an ascending triangle formation. So I even said this in these videos going back a little over a month. When we had this push in USD, you'll notice that we went into deep oversold territory. That was the most oversold the dollar had been in like 5 years. And it took a little while, but what I said then was, if you are a bear, wait, see if we get resistance and then see what happens. And we did. We got resistance. We got to pull back right to that 97, 94 level, big level that's been in play in varying ways since last April. And that initially held the highs. Bears took a shot. And then when I looked at this coming into this week, we had 3 of 4 weeks at that resistance. But bulls hadn't given up. Bears had started to swing less and less weight. That reaction to resistance was a higher low. And then we went right back up to that resistance. Then we had like 5 of 6, 5 of 7 as of Friday days holding right within that zone. And then we had the breakout to start this week. Now, again, it's easy to look at the headlines and say, oh, well, that's why it happened. But the structure here from this formation shows you the backdrop that even allowed for that scenario to take place. It's an ascending triangle formation, often looked at as a bullish breakout formation. Now, does this fill in every time? No. You do see failure in formations too, but that's not the point. The entire point is that if it does fill in, if you do get that break, A, you know that you have a bullish backdrop to work with, a bullish near-term trend, and B, if you are anticipating that break, that setup, you can look at something like higher low support for risk levels, and then looking for a factor of that on the upside if it does break out. It's the prospect of asymmetry if it does work. And then if it doesn't, let's look at one that failed, like the falling wedge that we had in Eurodollar. Eurodollar was holding a falling wedge coming into this week. As I said in the video, if I'm looking for USD weakness, this was one of the markets that was looking most attractive for it. But we had that little support hold, like 117.48. When this broke down in a big way on Monday, there's no reason to be hanging around there anymore. You had a failure of the formation, a break of support. At that point, the priority becomes loss mitigation and damage control. The whole benefit being prospect of asymmetry. If you have support, well, you know when you're wrong and you know when to get out. If you have a setup that does fill in, well, now you are in the very luxurious position of being able to manage a profitable trade, and life becomes quite a bit simple. Quite a bit simpler than, well, having to question whether or not we should close the positions working against us. In the USD now, I think the big thing that took over this week was that breakdown in the euro. Something I've been following pretty closely is that longer-term carry trade position in dollar-yen. And ever since we had the breakdown here in January, it's really seemed as though it was the positioning in that yen carry trade that has had massive impact on the DXY and DXY basket. As a case in point, it was this breakdown here on January 23rd when we finally got below 97.94 that had started to fuel the breakout in Eurodollar to that above 120 handle. And this, perhaps coincidentally, also came with that deep overbought reading. There wasn't anything great going on in the Eurozone at the time. This was dollar weakness coming out of the yen and dollar yen that showed up in the euro as well in a very big way. But if we are looking at the USD right now, the big problem is the same resistance that was in play back in November. I looked at this in a couple of different ways in these videos, but it was support in Q3 of 2024, came in as resistance in August, resistance twice in November, built a double top formation that broke down and filled in a very big way. If we do get bulls stretching, that becomes another imposing spot, especially if it happens soon, especially if it happens early. And I think one of the reasons that we're seeing these upper wicks, we're seeing this stalling at resistance right now, is because of proximity to that 100 spot 22 level. Now, I'm recording this video ahead of the NFP report on Friday. And something like that could certainly give some motivation for the dollar to move here. If the dollar just runs up to 100 spot 22, I don't like the odds of a break. Instead, I'm going to look for this to pull back and then maybe look for some support in this area, this spot of resistance around 99.48. The support that's in play right now at 98.73, it's already pretty well worn. Notice we've had a couple of hits here. I was looking at this in the webinar on Tuesday as we had put in the break. The challenge with this level is that it's already been well tested, and then we did not get a higher high after that support test at a higher low. So at this point, I like the odds of looking for a deeper pullback to like a 98.33 or maybe even a retest of that 97.94 level that had come in as resistance on multiple times before we had the breakout. I mean, that's just a real clean line in the sand. If we do get the dollar backing down there, which I think could happen if we get some weak numbers in that NFP report tomorrow, then that becomes, I think, a pretty significant test. But it's the dollar basket. So for the dollar to make that move, we're going to need some participation elsewhere. And there's something else I think that could bring some USD weakness into the fold. Now, what is the main push point across markets right now? It's oil prices. Oil prices have been causing weakness in stocks, strength in the dollar, weakness in the euro, weakness in the Japanese yen. Japan imports pretty much all of their oil. And we even heard Kazuo Ueda speak to this earlier this week when he said, if oil prices keep going up, that could be an upper push on inflation, and that's something we might have to address as the central bank. That is very similar to the threat of higher rates that we heard at BOJ in late January that ultimately brought this reversal in. Now, dollar yen is back into that resistance zone, but it's been around that 160 area. And I've talked about that in these videos where things have gotten pretty dicey. We saw where it was defended vigorously back in April of 2024 with an intervention. And then here in July of 2024, the pair goes spiraling lower. In 2025, bulls didn't even want to mess with that level. Same thing earlier this year. Didn't even want to test that 160 level. And then, oh, by the way, when we get up closer to 160, the finance minister starts coming out with verbal intervention threats. The comment that I think got everybody's attention was when she said both she and Scott Bessent did not want to see the pair continuing to rally. They both wanted the same outcome of USD weakness, Japanese yen strength to a degree to cool the jets on this move. And so it seems like there's a lot of factors stacked against continuation in dollar yen right now. That said, I don't want to completely throw the long side of this out the window. I just don't want to chase it when we're so close to that 160 level. Instead, I think there's a couple of supports that are worth tracking and following. This one here at 156.27 is a level that's had some shorter-term interest. Going back here and into here. The big picture zone, 154.45, 155, that's been in play October into December. This was that higher low or that low that's set ahead of the BOJ rate hike in December. Massive spot. When I looked at this a couple weeks ago, this ultimately is what helped to set the low and then drive that additional recovery. If we do get a pullback in there, it actually could look pretty attractive again. But it's the 150.195 to 152.50 zone that has so far held two really strong sell-offs in an aggressive way and led to a bounce. That's what I'm looking at as invalidation right now. If dollar yen breaks below that, I think something shifted, something's changed, and that's where we could get a bigger picture breakdown in the USD. In that scenario, I'd anticipate that USD is below that prior resistance for the ascending triangle formation. In that case, I also would expect euro dollar to be back above 120, but that's another matter altogether. But on the euro, let's get to that. So and I'm going to say the same thing I said on the USD back in late January. If you are a euro bear, and kind of like I looked at in the Tuesday webinar, if you're a euro bear, getting short when oversold, not the greatest way of doing things. Now, RSI is not a predictive indicator. It's a lagging indicator. And so there's going to be periods where it's incorrect. But I think it could be a good warning sign of chasing a well-developed oversold trend. If you are bearish on the euro, let the trade breathe a little bit and see if we get sellers coming in at this 116.86 level or maybe 117.48. That's the point that you want sellers to defend that breakdown move. And right now, the big quandary that I would have is how much meat is on those bones for a short side sell-off. You can even see this on the daily chart with these underside wicks, where sellers have had open door to go for a break and failed. Open door to break, failed. Open door to break, again, failed a third day in a row. And if they do get down, that 115 level has been pretty imposing. So it's kind of like 100 and DXY. If we do get that quick stretch, I think it's really difficult to buy into a continued break, and instead it starts to look more attractive for a reversal kind of setup. But in euro dollar, 116.86, 117.48, they both represent areas for possible lower highs if looking for USD strength to continue. Cable is another pair that I think is of interest, and this one, similarly setting this up where there's open door for sellers to go for a continuation move in here. This prior support at like 134.14 to 133, 134.14 to 134.34. Group of swing lows down to a Fibonacci level, support to resistance. This is a big spot. If we do get bulls grinding through that, that's going to be a big statement move in my mind. And that's something that I think could expose a retest of that 135 handle, and that could quickly bring back bullish themes in cable. I think a few different pieces are going to have to come into play for that first. But for now, if you're bearish in cable, that doesn't have RSI, but we can get RSI over here. If you're bearish in cable, selling it when we're oversold territory on Tuesday, not the greatest time to do that. But it's moved out of that oversold territory. If we do get up to test that 34.14, 34.34 zone, there's an area that sellers could come in to defend. Makes a very valid case for bearish continuation setups. Another market that I've been following for USD strength is in dollar CAD. And this one, I think, still has some pretty attractive construction. That said, if you look at this on the daily, it has been, they call this a stick sandwich. There's candlestick wicks on either side of this thing. But so far, there's been a pretty adequate support hold. But what I want to see now to keep that alive is a break of that 37.27 level that was in play back here. And now is resistance. A break above that opens the door for a 38 test and then maybe even a 39 to 39.25 test. But that's what I'm looking at in the USD. That's what I'm looking at for that ascending triangle break. And oh, by the way, the setup we looked at a couple weeks ago, ascending triangle in cable, or excuse me, in gold, broke out in a really big way. Not all formations come to fruition, but the benefit of that is when they do, the asymmetry could be attractive. But thank you for your time, and as always, happy trading, ladies and gentlemen.